Hey, hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to the weekly stock market analysis show, where we look at technical charts and try to understand what happened in the market during the previous week and also plan for a better trading plan for the next week that's starting tomorrow, Monday, May 26th, 2025. So let's deep dive into the charts to get a bird's eye view on what happened. So this is the Nifty charts weekly on the left side, daily on the right side. You can clearly see on the weekly that the correction is over and market was trying to move up, recovering substantially very well, and then attempting to break out. And now this previous week it was a pause, consolidation, resistance, what do I call it. Similarly on the daily charts, you can see that the panel channel top was almost touched, and then market pulled back a little. Profit booking met with after meeting the resistance, you can say that way. And the Banknifty, you can see the ascending wedge on the weekly, which recently made an all-time high, and then there is some more space left to top the wedge. So expected the market may try to kiss that ascending wedge top once again. And daily chart shows that it's a parallel channel top and a correction has happened, pullback or profit booking has happened after that. So in a nutshell, if you see Nifty has paused the breakout attempt of this week and met with the resistance, and profit book happened, and it closed negative basically, a little more than 0.5%, 0.68%, that's 169 points down. That's what Nifty is, but still it's about the 20 daily exponential moving average. Remember, it was a 17.2 or 7.5% of correction that has happened, and the rally is 72% for the last 2.5 years or something, right? Nifty, if you look at the index, it's also paused previous week and then ended flat, positive, but flat. It's a flattish close in Banknifty. That's just 45 points up, but still it's about very 20 daily exponential moving average, and it's very close to the all-time high once again. Remember, the correction that has happened in the Banknifty is only 12.4%. That's remarkable. With a very small market, Banknifty reached the all-time high and then pull back a little bit, and then looking for breakout opportunities once again, while Banknifty is still lagging behind another 1,500 points or something to break the previous all-time high. So that's the story about. And now if you look at the weekly charts and daily charts of the Nifty and Banknifty, so weekly charts, if you see, that's a medium chart, that's we call them. And here the candle that is formed is actually a hammer on the Nifty on the left side weekly. So that hammer is well inside the previous bullish breakout candle. So that means it is a profit booking, or it's consolidation, or it's an inside bar and a hammer. A hammer often on the top of a rally would mean a reversal. So you have to be cautious in case the price moves below the hammer's low. I'm talking about price. So that's only a possibility, and the wick size of the hammer indicates the kind of volatility that we had the previous week, right? So market, is, we can say, consolidation, volatile. These are all things that you can make out, right? And right side, Banknifty, if you look, it has formed a pin bar. A pin bar also on the top of the rally could mean a reversal from there. So it's at resistance. Nifty also at resistance. So anything would happen. If the price move below this candle's low, then it can be looked up as a reversal on the downside. But otherwise, the wick size indicates the volatility similar to how Nifty hammer's candle indicates. Pin bar, just like the hammer, could be a potential reversal. So that again confirms that Banknifty also is at resistance. And when you get daily charts, if you see, you can clearly understand the 5 days of action. It was a down move after previous week's breakout. It was a down move and then an attempt to recover that. Half that is done in Nifty, but Nifty did almost a full recovery after doing the same. It's a V-shaped move. So that's volatile week, closing almost flat in Nifty and losing a little bit. Means nearly 0.5% of losing on side, with respect to the price on the case of Nifty. That's the story. So it's to summarize, the price action from the candle and candlestick shows a consolidation of the median chain, a volatile, weak profit booking, and once again it is heading towards a resistance zone. Bollinger Bands, if you see left side Nifty and right side Banknifty on the daily, Bollinger Bands are indicating that it is expanding. The upper side of the band is expanding, which means there is a scope for further upside. Now it has taken a support and it's above the median of the Bollinger Bands. That's 20 moving average. So that means it's bullish biased. Now if you look at the Banknifty on the right side daily charts, you can see it was absolute consolidation, but the beginning of the expansion upside has started this last day on Friday. So that shows more bullishness could be expected in case it climbs towards the top of that band. But that is also having a bullish bias because it's above the median of the Bollinger Band. That's 20 moving average. So our bullish bias and more upside is what probably both indices are indicating. Now after the candlesticks, we are looking at the momentum. The momentum, we are using the RSI indicator, and we are looking at the multi-time frame analysis again. On the left side, you have the Nifty and the Banknifty weekly charts. So it indicates it's bullish momentum. It's intact. But it has taken a dip last week, right? But that way it has formed a range shift, which is momentum range shift, which is a powerful bullish concept. If you want to know more about that, check the playlist. So the range shift gives an opportunity or a chance that it can take the support at RSI 60 and then bounce up from here. So the momentum could take support at RSI 60 and bounce, is what it indicates. Bank Nifty, remember, had already taken that 2 weeks before the range shift. So momentum indicates extra bullishness in addition to what the price is saying. So that's on the medium term. Now if you look at the short term momentum RSI, you can see that it similar to how the price action has taken place. Momentum also has taken a dip and slide from the bull zones which it had achieved the previous week, and it has taken a dip last week and then recovered that and climbed back to bull zones almost. But you can say it has not completely succeeded in that, and momentum is sideways and rising up towards the bullishness. So overall you can say almost bullish, you can say, but technically it is sideways rising, while medium term it is bullish. That's about the momentum. Now if you talk about the trend indicator, it's ADX that we use, and it indicates momentum. It indicates that the trend has taken a dip. Definitely it is lost its trend to some extent on both time frames, but it is still bullish. So trend is bullish, but momentum is slipped slightly sideways in the short term, not on the long term. Long term also just dipped but not fallen below the sideways. That's the story about momentum and trend. Now volatility is the one way of understanding the volatility is through the Bollinger Bands, which it already seen. Another way would be to understand the fear and greed indicator, that's the India VIX. We just spiked up 4.6% last week and it's at 17.28. This is where we have to be a little cautious. Otherwise everything looks fine. Right, it is a recession, but candlesticks moves on Fridays are good or not really bad. Although Nifty lost 0.5% last week, but that was after a big breakout. Everything was fine, almost close to bullishness. But look at the VIX, that spiked up and it's still not cooled off last week also. Now this week it's spiked up further at 17.28, means it's at high volatility. Anything above 15 is high volatility. That means the fear is still there in the market. The fear could be about the tax tariffs. Fear could be because of the work escalation possibilities, and it could be anything. But until that cools off to the medium term or long term, that's below 15 at least, if it does not happen, there's a high probability that anytime the reversals could happen. We have to be extremely cautious, and this is the single point that is creating caution this week. Keep that in mind. If you further move up, the next step would be to understand the open interest. That's for the futures and options, right? Open interest analysis is what is open interest and all that. You can check the playlist. There are a lot of videos that's put in there separately. So open interest overall again is almost bullish, you can say, because Friday the futures open interest is showing long build up and the short covering on the Banknifty also is bullish enough. Now for the options bet that is taken for the option writers for the May 29th, the monthly expiry, which is supposed to be very volatile as usual, the put call ratio for that is indicating positive +1, which is bullish, absolutely bullish. But in the Banknifty it's bearish because it's 0.9 only, not above that, but it's heading towards bullishness again. So overall there is some element of bullishness in the futures and the options, right? And that's what the charts are indicating. So now this open interest chart that you see here below is used also to understand where the maximum resistance and supports are there based on how the put writing quantities and call writing quantities are there, right? So that can be understood. So for the Nifty, The maximum put writing is seen at 24,500 and maximum resistance or the call writing is seen maximum at 25,000. Second highest put and call writing is at 24,800 and 25,500. Right. Now for the Banknifty, which is a monthly expiry that's coming on the next week, is 55,000 and 55,500. Very narrow range is what you see, similar to the Nifty, right? So that's where the highest put and call writing is happening. Second highest put and call writing is at 54,000 and 56,000. That's a wide range, right? So once that narrow range is breached on either side, then the range becomes wider. So that's what other deals are already discussed. So what we have to do is another way of finding the support resistance is using the technical charts. We'll correlate that with the charts where the bet for the monthly expiry 1 week ahead has happened, and then correlate that and try to conclude at a position where you find the support resistance. Now the Nifty support resistance level that's shown and the Banknifty one that is shown is based on the charts, technical charts. We're basically looking at several things like the window gaps, previous resistances, piercing lows, piercing highs, all-time highs, Fibonacci levels, swing lows, daily expansion moving averages, and all of this. So all those is mentioned in the bracket, and we can later on have a deeper look. But now I'll just quickly give an overview on how the resistance support levels are. So right now, 25,000 is going to be the first major resistance, and after that, slight resistance can come in at previous resistance zones at 25,300, 25,105, and all this. And then there is a gap that's coming at 25,739. That's going to be a major resistance. And after that, previous resistance at 25,850 levels. So that's the major resistances that you can see. Downside, the previous low has taken a support at the 20 exponential moving average, which is at 24,500. So that is where the major support first initial is coming. After that, it's a gap that is seen at 24,164 and then 24,000 rounding number. That's where the resistance major that's going to come. In between, we have 50 exponential moving average, 20 exponential moving average, previous breakout zone or previous zone high, and all that. So major supports could come in at 23,800 nearby. In case this gap is also taken out, in case the 20 exponential moving average also is taken out, the major support will be the place where it had broken out earlier and where it can find once again change in polarity support zones and then bounce up from here. Okay. So that's how it is done. So in Banknifty, it's a flag pattern that is clearly seen, and it's a resistance zone because it could reverse and take another swing low and then again move up, or it could break out from that flag. The length of the breakout could be same the height of the flag. So if the breakout happens, all-time high before that rounding number 56,000 is where the first resistance is there, and then all-time high is 56,100. Then it can be anything. You can use the Fibonacci extension to further analyze that, but that's the resistance on the downside. This cup rounding breakout has happened at this 54,000 nearby range, where a gap was also there. So that's going to be the major support on the downside in case the next moving average at 54,700 is also breached. After that, you have 50 exponential separated to 53,358 and then 52,000 and 52,136, and all of those clearly marked here, and it is mentioned here as well. We can have a look later on and then find support resistance levels. Let's move ahead. Now, if we're trying to understand different sectors, major sectors only, and then try to understand what has happened there, what is the momentum there, and details like that. On the left side, you see the IT index. Then down you have the metal index, top you have again auto index, pharma index, FMCG index, and then reality index. So pharma for the IT index has recovered after the correction, and then it's sideways and trying to move up, and that move is happening in a parallel channel, so a lot of space to move on. So trend is bullish, so you can expect it to continue to happen on the upside recovery. The metal is also in the middle of a trend line after recovery, and the momentum is still sideways and not climbed to the bull zone yet, so it's sideways. And auto is actually was trying to break out with respect to the momentum to RSI above 60 on the weekly, but it has not succeeded. It's not band resistance, so it means it's at resistance. But in case the resistance is taken out, momentum will climb, price will can go towards the top of the trend line channel. The pharma also in the middle of the trend line channel, but in the sideways clearly. FMCG also in the middle of the trend line channel and sideways clearly. Reality is in the top of the flag pattern, and breakouts could take it to all-time highs back again, and sideways trend line sideways and rising up. So overall, its sideways momentum is sustained by all the major sectors. What we can understand. If you look at that, you can see previous week it was all slightly down, except for the metal and the reality, which is moved 0.5% on the metal and 0.7% on the reality. But otherwise, it is all down around half percent, 0.5%, 0% metal down, metal it's 1.5% IT up, IT down, auto sector almost 2% down, pharma is 1% down, FMCG is again 1% down. So almost all sectors are down previous week. But what has happened is previous to previous week we just climbed the sideways and maintaining the sideways. Although there is a dip that has happened, so things are fine. But not as fine for us to take long positions in any of the sectors. That's what you have to keep in mind. It's sideways. It's consolidating. It is not broken out. Momentum is not climbed into the bull zones yet on the medium term. So you got to wait until then to take long positions. So that's a nutshell. Now, similarly, if you try to understand the different heavyweight stocks that contribute maximum to the index, these are those stocks: the HFCs, the Lands, the ICICI Bank, the Nifty, the TCS, Kotak Bank, and ATC. These contribute the maximum. Now, TFC already climbed the bull zones after a range shift breakout in the momentum. You can clearly see with volumes, trend, momentum absolutely bullish. But now look at this, it's at the same place where there is a trend line top. It's a resistance zone. So make or break, anything could happen here, but most likely, looking at the momentum volumes and all that, there's a likelihood that it can break out from here and go above 2000. If that happens, market would shoot like a rocket because HTFC contributes a lot to the index. If a market, it means the index. Lands again has climbed above the median of the parallel channel and heading top, but last week was a dip. But that dip is in the bullish zones in the momentum. Keep that in mind. So absolute bullishness is seen there. Lands and HDFC and ICICI, third one. That's also a momentum range shift bounce that has happened. Clear bullishness is seen, but heading towards the top of that trend line channel. Right, remember it's near the all-time high HCC Bank. So all three are doing absolutely good. Now the IT stocks which are doing bad is in the recovery mode and then climb back in this sideways zone from the bear zones after spending quite some time there. So it's a sideways IT stocks, Nifty also and TCS also. Kotak Bank has always been consolidating range. It's doing the same right now, but it is doing it in the bullish momentum. That's what it is. So it's on the upside. It's a possibility that it can break, it can also break out, but normally it's a contrast stock which keeps on consolidating forever and slightly moving up after a long period of time. Now ITC, the FMCG giant, is actually also having a flag kind of parallel channel and flag combination, and has every potential to go back to the bull zones. But right now it's sideways and trying to move up. So sideways ITC is normal. Right, but it doesn't do too much downside, so keep that in mind. So overall looks fine. What is holding the market up is the banking sector stocks, including HDFC Bank, Kotak Bank and ICICI Bank, and along with other lines. That's what is holding the market. That's fair enough. Here, if you try to understand the broader markets like the mid-cap segment and small cap, there also nothing much has happened last week. But previous several weeks it was a recovery that is clearly seen there and is doing good, except for a small profit picking that has happened in the previous week. Things are fine, sideways and rising up. Right, some bit of momentum has lost last week, but it's okay. Things are fine. So broader market also showing this trend is double positive, right, along with the heavyweight stocks and the different sectoral indices. Overall, sideways momentum, bullishness, heading towards bullishness is what we can summarize it as. Now that fair bit of analysis is completed, we would look at the institutional participation. Institutional participation is about foreign institutions and domestic institutions both. So foreign institutions has been selling nearly 12,000, that's 11,590 crores in the cash market alone. So that is a change of pattern because the last 3 weeks or something, 3 weeks or 4 weeks, it has been buying. Now it's selling. So that's a red flag. Why the selling suddenly? Is it profit booking that they're doing, or is it another selling spree that's going to start? Right? The market moved up this much just because of faster buy. Now those institutions, as usual, they have bought again 100,000 crores. That's what held the market up. Net longs on the derivative side, since showing that the FIs and DIs both have moved So the betting is on the long side for now on the derivatives. Now the next category that we are trying to understand is the global markets. That's primarily the US markets, and the commodities like the gold and the crude and the currency, right? US currency and our currency. So let's begin with the currency. So dollar index is a good amount of action that has happened last week. That's nearly 2%, 1.86% down. Dollar seems to be attempting to break down from that consolidation. So it's a very good news for emerging markets in one way. So nearly 2% down in a week. That's really, and it's fallen below the 100. It's 99.1, and it's having a momentum that's falling down. So that's about dollar index. Now, if you look at the USD INR currency pair, we see that is also down nearly 0.5%. 85.15 is very good. So currency has gained, dollar also has fallen down. So it's very good news for emerging market like ours. Now look at crude. Crude has not done anything bad. It remains at the 62 below levels, which is also good for an oil importing country like ours. Now what has happened to the gold is that it has ended up with a correction and then made a solid bullish green candle with a bullish momentum and volumes and tried to make another all-time high is what it looks like. So that is some bit of caution that when you have the gold once again spiking up after a huge rally of 115 or 120%. Once again it is trying to go above that 3,400 level or 500 level would mean that there is some caution in the minds of people with respect to the equity market, and then they are shifting to safer havens like gold. So that is not that great news, but for hedgers that gives additional confidence to keep on investing. So gold has spiked up another 5% and it's a bullish momentum and rising up after a steady breakout rally of 115% or more. So that's something we have to keep in note. But otherwise, US markets, if you see, it is close red as compared to the previous week. It made a smart recovery and climbed through the zones and the bull zones, and it has suddenly met with the resistance and the Drawdowns that you can see. Same has happened with the Nasdaq. Some kind of pause or consolidation is what the red candle shows. So previous week until that it was all good for the last several weeks, plus trying to move up and make the completion of the recovery and make new all-time high as well. But that attempt got a pause previous week. So red US market is the story, but not that bad enough. But overall, except for the gold spiking up and the US market showing some red, things are fine with respect to the currency and the crude oils and all that. But things are not that bad at least, right? Except for the US markets for now. But the US market has not done that bad, as I said before, repeating things sometimes. Now that analysis almost over, let's have some actionables. Actionables doesn't mean that these are recommendations. They're just items for educational purpose, and make note of that. And you have two things on the long side, two stock picks. AGL1 is a stock broking company. We all know that. It's a weekly chart is what you've seen, and it's a parallel channel and then ready to break out or reverse. Never know what happens, so have tight stop losses. Momentum anyway, I have climbed the bull zone is the reason that we have picked it up. Volumes descended up and trend also is spiking up in the bull zone. So a 1:2 plus reward can easily be obtained if the breakout happens. Probably more than that, because considering the length of the flag or length of that panel channel, it can be even more, but trail that after the target is met to 1:2 RiskReward. BHEL, Government of India, the company or something, has done a substantial good correction and then trying to move up, and it looks like it's a cup and handle breakout possibilities there from here, but have types of loss again because momentum has just managed to climb the bull zones and trend has just crossed over the bull zones, but not having enough strength, but cautious about that. But what is looked decent enough, and there's done a decent correction from from the 320 levels to 200 below levels. So now it may be recovering that, especially after the war related news and all that comes. So 2 or 2.5 square can be looked up easily. if that doesn't start the pullback once again, but there is less likely that there's a, because I forgot to draw that parallel channel here. So it's a cup breakout and then a reversal. There's a cup and handle, beautiful cup and handle pattern, which could easily take out and trail it if you're in a slightly long-term investment. But these are swing trade opportunities that can extend not more than 1 or 2 weeks. Right? Have tight stop loss although and trail it. Both of them has the potential to move more than what the RiskReward is mentioned here. That's why I'm mentioning. Okay. Now, another one is the FNO strategy. This is the Batman strategy with the options, and basically we are taking inside hedges and outside. We are selling OTMs, far OTMs, and we are again buying also OTMs, but inside hedges, you can say. It's not completely RiskReward. If you want to make it completely RiskReward, you'll have to take 2 more single lot wings. You'll have to buy on both sides, call side and put side. But I'm not doing that because the profit would go down. But the risk is very less compared to the. If you compare that with the range that we are getting, it's a very good range of nearly 600, 800 points, and so if it falls, if it corrects further also, it may hold it at near the 24,000, and if it breaks further also, it may find further resistance as it approaches near the 750, 25,750. So you can probably cut out the position or buy the hedges on the outside in case there are some big movements that are happening, but as otherwise you can hold on, and without, even if the volatility comes, this could hold on, is what I would make out. So let's have no Batman strategy in the options that you see here. It's a educational purpose around. Let's try to wrap it up. So market basically paused, consolidated after a decent breakout that happened previous week, and now it's at resistance. It closed slightly negative on the case of Nifty and flattish on the Banknifty. So momentum in the trend has lost its steam, but it managed to sustain that thing on the medium term. At least the momentum is bullish. Trend is remained to be bullish as we had seen earlier, and the FIs have turned to be net sellers. That's probably profit booking. Let us see. We will come to know only about the next week selling or buying, right? So remember, it was 7.5 to 20% of correction that has happened after 70% of rally during the last several years, in this couple of years. So keep that in mind. Now, if you want to further analyze, we'll have to consolidate our understanding or analysis that we've done and put it in different buckets in favor of the bulls and in favor of the bears. So in favor of the bulls seems to be more this week, even after it's a flattish or bearish close, because of the factors like the US market is showing, there's a mistake, US markets are not green. I gotta cut that. Right. So options RI is bullish, definitely. Futures RI is also bullish. Options RI is not bullish in the Banknifty, but almost bullish, you can say 0.90. So all bullishness, you can say. But the bands are bullish because it's expanding on the upside even on the Nifty. It's having a bullish bias definitely. Crude oil is low, and currency has gained a little bit. Forgot to mention that. And when the trend is sustaining that medium term bullishness, and heavyweight stocks are sustaining that sideways momentum, broader markets are also maintaining that that momentum and the trend the previous week, and prices are about only 200 exponential moving average, and these are all things in favor of the bulls. But if you look at the peers, the US market red, India weeks are rising above 70 in the high volatility regime, and FIS turning to selling after a couple of weeks are all red flags. And that's what we have to keep in mind. Now, we have to come to a conclusion. So, before that, you have to be cautious, right? You have to be cautious because markets at resistance. There are many global cues that could suddenly turn bad, like it had done in previous weeks. So, you have to be cautious. Also, they can be expected. You see them in the VIX, but market is trying to break out, want to break out, is what the chances are. So, mild bullish is what I would say the market for the next week is, right? Now remember that technical analysis can go super wrong if there is a black swan that comes at any time. Levels for the next week that I look forward is 24,000 and 25,000. 53,000 and 56,000 is what the Banknifty levels that I'm looking for next week. So 26 is breached and 56 is breached, means we are back to another rally. Breach in the sense breached and settled, sustained, right? That's all I have. Now always keep in mind you have to hedge your positions, put your portfolios if you're playing options. Even otherwise you can hedge. You can even hedge using options and make money. Even if you're an investor as well, you can get regular incomes. Check out the playlist for more details on that. Covered calls and cash secured puts and all that strategies are there. Check out that. That's not in the scope of this presentation. So let's wrap it up. So that's what I have. If you like the content, subscribe and share with your friends. And hit the like button or do whatever. So I'm also active in X Impulse. That's my ID, and you may subscribe to that as well for regular daily analysis input. So thanks for watching. Happy trading, happy learning, happy investing. Bye bye.